Good evening, all. I'm Epstein with your SPDR-ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, the 15th of November, 2023. Well, Presidents Xi and Biden and their teams have now wrapped up a 4-hour summit, so it's done. I know from looking at the news that big progress made on fentanyl, military communication, air travel. They want to see an increase in that and tourism between the two countries. Not convinced they made any headway at all on chips and chip-making equipment and things of that nature. But folks, don't look for a miracle. This is good. And I think President Xi realizes you have a hamstrung president making this deal that's got real problems at home. The person he ran against before that's not president's beating him in the polls. And as I understand it now, we may see Mr. Manchin jump in. Now, if he jumps in, he's going to take votes away from Biden. That only hurts him even further. He'll take votes away from Trump, too. It won't be just one-sided. There's a big group of people that will look at him and say, I can't stand either of the other two. I want to get somebody that showed some level-headedness, and he's certainly a guy that did. You can't argue that. His age, he's 76, but we'll see. He definitely today said he is really looking hard at that decision. So we ain't over by any shot. And of course, you always remember Obama's, Mrs. Obama is in the background if she ever wanted to run. I don't know what she's capable of, to be in all fairness. She's not really presidential material. She's a bright woman. I'm not saying that, but where's her real experience on the world stage of running a government? Certainly as a philanthropist, absolutely. Certainly for good things in America, absolutely. I really mean what I'm saying. I think she was a great first lady. But just taking her because she's popular because of her husband and saying she's presidential material, I'll stand behind what I just said. So when we look at Home Depot, I brought it on, and the market took off beautifully to the upside. Okay, I'm impressed with that. When we take a look at swing lines, it's a straight-up move, so you got to be careful here. This market has just gone from 286 roughly to 308. That's a big move, and I know you're going to tell me it's going to the moon. So if the moon is where you think you're going, the next stopping spot's 311 in this chart on the current run, and you're already over the upper Bollinger Band and you've hit the 200-day. Guess what? I think pros are taking money off the table right here and right now. Could it go further? Yeah. Have I seen some analyst calls for 360? I have. Okay. However, tame yourself back, okay? You just got off CPI numbers that were very interesting and say that, yes, interest rates are probably not going up in the near term unless there's a real surprise in something. The cut, don't know when they're coming, but my guess is into the second quarter of next year is a very real possibility. We saw PPI today come out. It fell hard. Biggest drop since April of 2020, in large part due to the price of gasoline, which is still falling. So that doesn't hurt all this. Bad news for the retailers. You're seeing the retail buyer, the retail buyer, pull back a little bit here. That is important. Is he saving up for Christmas and Black Friday? That's always a possibility, all right? Remember, we're smart. I need to buy a few things for myself right now, not much. And I won't buy until Black Friday, all right? And then I'll see, can I get a better deal? The stores are already teasing you that they've got those deals, and in Chicago, they're already showing on TV. Do your homework before you go into the store, because often, even if it's 2 for 1 or whatever they say, you can do better if you do a bit of shopping around rather than get caught up in the beauty of the stores. And it is beautiful. It's a fun experience to go and touch things. I think you'd agree with me on that. In Rivian, okay. So now we get better explanation of the $15 million fake bond that they announced. Remember yesterday said they're going to build in Georgia. They are raising $15 billion. Well, what it really comes down to, and I'm not going to explain it all here, they don't owe any money on this. The land's going to be given. They'll pay the equivalent of what that would all cost. They're going to go in and they're going to create a really big plant, and they did not take on debt load. That is why today this market was up 2%. Once we got the facts, it was easier to see what's going on. Good company. As long as you don't take out today's low tomorrow or the day after, why not target that you're going back up to the 18.15 area, about $1 higher than this? I see no reason not to. When you take a look at UGA, in order to get me friendly, you got to get through Tuesday's high right up here. Barring that, all that we did is rally back to the 200-day average and the 18, and we got thrown back one more time. So it's not showing you that it wants to pick itself up yet. In XLF, obviously the cut in interest rates, or the perceived cut in them, is doing the job in the marketplace. XLI, you're up to now the 100-day average in the Bollinger Band. I wouldn't go chasing these markets. I want to come out and just say it plain English. It's been a big 2-day rally that most traders didn't see coming. It took off. Now the question is, if you want in, do you pay up to come in up here into Bollinger Bands and moving averages that are above you? My answer is no. Simple. Don't have to go any further. My answer is no. Wait for pullbacks and trade it the way you would any chart pattern. Nothing's going to the moon. We have a long way to go in this whole mess. Then we come to Walmart. Well, up and over the upper band, up another 1.27 today. Retailers are doing pretty good. I saw Target did great, not because their sales picked up in any manner. They didn't. They got their costs under control. They got better inventory controls. They're moving the product in the way they should. They'll be perfectly in the right spot at the right time as Christmas rolls around in these other months. They surprised the market today. Well, this company doesn't need to surprise. It's a genius at how it runs itself. Excellent company. RSPD, so now we get up to the consumer, and he's just going, all right, well, this is pretty important stuff. You're up to the 200-day average. The right above you is the 100. Obviously, the market is saying with lower interest rates coming, the consumer's going to have more money in his pocket. That's what this is about. He doesn't have it today necessarily, but he's also seeing slightly lower rates on different things. All right, if he's got a variable rate mortgage, it's going to slip a little bit on him if it gets reset at this time. Different things like that are happening. Pay attention to it. Are we trending? No. So many of these markets don't have higher low, higher high. Again, they got caught off guard with the CPI and now the PPI numbers. In the home builders, I told you about the Irish jig yesterday. They're doing, honey, we're back in the game. Well, that's what's going on, and a little bit of profit taking. You can see that. Again, this is the first move over the 100-day average. My guess is you're going to slip back there and try to hold it, but there's also more bullishness that's happening. Today, you got the 18-day average got over the 200, so it's a bullish crossover. That is good news. Big support down here. May have seen the low on that for the year now in the home builders. That we might have just witnessed it all. Energy's not looking good. Energy's trying to force more downtrends, but into the lower Bollinger Band, but not looking good. Now, I'm sure this is going to get the attention of OPEC, and I can't imagine they're going to say anything at their next meeting, but they're going to keep their cuts in place in the near term. Could they decrease production? That's the word I want to say, increase the size of the cuts. Yes, they could. We'll see what they come up with. But that would be on the Saudis, and I don't think they're going to do it all by themselves. In gold, 2 days ago, you got down to the 100-day average Bollinger Band. I think I did the right thing when I said that's where the pros are covering shorts. I don't think they're in this market right now. I think they're just drifting with a higher high, lower low. There's really no pattern there. And you had an unwinding of a big event. For months, it has been the being long gold, short silver. It all unwound in the past 48 hours. And the spread has completely unwound itself. But I think silver's now at the spot where it's got serious issue. This is where I think professional money comes out of it. Right here, right now. In the copper market, there's one of those bad quotes. It happens sometimes when we get these at this hour. Higher lows, higher highs, not a lot going on there. When we come to the dollar, you're down to the zone where it doesn't have to keep falling. Could it? Sure. You can go to the 29.05, the 100-day average, but you're already oversold. You're at the band. There's no reason to be a buyer. And by the way, would I have had you short? None. So I wish I could say, oh, this is where I'd have you short. Look what you did. This market was caught between the upper bands, the lower band back to neutral, and then the CPI number caught the market off guard. Flip-flop of it in the FXC, and again, I think the pros are taking money off the table. So you put it together, and after 2 days like this, how do you trade this market? For day traders, this is the technique that I'd recommend to them, pivot points. After you get these big, broad ranges, the trader starts fading the ranges. And where's the sells, where's the buys? The formula in the pivot point does it. You don't have to do it. You probably have it on your charting service. Look at pivot point. Do you know how to work with it? Because you're going to develop a center line. You're going to try to sell the market above and buy the market below. You're not trying to go from here up to here. You're trying to go from here or here, basically from the lower line to the white and from the first red line there. If the market exceeds it, you're waiting to come in others. How do you know to take the first or second lines for the sell or the buy? Well, I tie it together with slow stochastics. And I find that the two of them together are a deadly combination. I like what I see over and over. Now, I don't like day trading. I'm too busy during the day. So what do I use it for in the series? Let me tell you. I get a buy signal on the techniques that I tell my subscribers and everybody to go with. Sometimes I have to adjust them, and I'm looking, I'm going, all right, there's a 3-day average, there's a 18, there's this, but look at, here's that pivot point, and boy, look at the stochastics. I'm better off reaching, put in the order at that number. I think I'm going to do a little better. I do this over and over. All you do is put it in, you create a chart page with it, and away you go. It's simple, and you just put in your sim, and you go, look at that, and now here's my other numbers. I don't think it takes me, honestly, 5 seconds to look at it, see what it's doing, and then go right back where I want to be. Pretty simple. How do you learn this? Go to iraepstein.com. It's a free course under our free offers. Move your cursor to the top here. You'll see an icon. That'll take you into the free offers. Sign up for it there. I'm Ira. You have yourself a great evening. I'll see you first thing in the morning.